Welcome back. Well, the market move is getting a bit better. So let's take it across to Mr. Bharat Puri, who's joining us from Pidilite. Hi, Mr. Puri. Good to be speaking with you. Well, on a sequential basis, there is a bit of a disappointment on the margin front because it's coming in lower than what Street expected. What happened here? What impacted margins? What about the way forward?
No, we've always said that as far as our margins are concerned, we manage them on a year's basis. We've always guided that we would like to be on a standalone basis on an EBITDA margin of 20 to 24%. If you look at the year that has ended, our EBITDA margin is the higher end of the range. It is close to 23%. On a quarter-to-quarter basis, you may have some quarter where you spend more on investing behind your brands, investing in dealer incentives, some route to market initiatives. My invitation to you is to look at this quarter to quarter is not the right way. I would, go by the year's guidance. And if you look at our overall EBITDA growth, it is actually at the higher end of the scale. We've grown EBITDA on a standalone basis, I think, by close to 36%. So in our way of working, we don't manage this on a quarter to quarter basis. We look at it on a year's basis.
Right. In your press release, you've also mentioned that your guidance still remains in the 20 to 24% kind of a range for FY25. Can you talk to us more about it?
Absolutely. Our clear objective is, can we continue to deliver double-digit underlying volume growth, and can we do it in the margin range of 20 to 24%? Those are our broad objectives, and that's what we will be obviously trying to achieve.
Okay, point taken. Just wanted to ask you again, in your press release, you are, talking about near-term demand weakness. What's leading to the same? Because real estate demand is on the rise. What then kind of explains the weakness you are talking about?
See, when we are saying near-term demand weakness, it's not more, it's really, if you look at the environment currently, we have a long election. History shows us that elections always lead to some amount of disruption as far as it's not a significant disruption, but there is still some amount of disruption as far as demand is concerned. We're also seeing a very early onset of summer in about 2/3 of the country where heat levels are high, but this is normal. I mean, to our level, again, as we say, I think on a near-term basis, while in the next 1 or 2 months, we may have some disruptions as a result of all of this. Frankly, where real estate is today, where construction is, and where demand is, I think we're fairly confident of the prospects. And that's why you will also see in our press release, we are optimistic of the prospects. Even for the year, then you may have disruptions in 1 or 2 months.
Right. Mr. Puri, in the fourth quarter, your other expenses have risen on a yearly basis. Can you talk to us a little more exactly what led to this? Is it because of more branding initiative which you've taken in this quarter?
See, on a consistent basis, we keep investing behind route to market. We keep investing behind our supply chain. I mean, just to give you a perspective, just in the last financial year, we've opened 10 new manufacturing facilities. We obviously, just in a route to market, we now are, rural initiative, which is Pidilite Ki Duniya, where we have these small branded stores in villages, 5 to 10,000. We now have 13,000 such stores in the country. There are 13,000 Pidilite Ki Duniyas. Our distribution reach, we've added another about 40,000 villages just this year to our direct reach. So all of these are investments which we believe are investments into volume growth. For a leader like us, we believe the right mantra is profitable volume growth, and that is what we continue to pursue.
Okay, Mr. Puri, so point taken, you have increased your presence as well. But what about the raw material prices? Because crude of late has been fairly volatile. Similar could be said for the polymer prices, etc. as well. Going forward, what's the outlook?
See, as of now, raw material prices by and large are back to normal levels. They're stable. We are beginning to see some little signs of inflation, but very little. I mean, that's normal. You will have something going up, something come down, but overall they remain quite stable. So at least in the first half of the year, we do not see any material change as far as raw material prices are concerned in any significant basis.
Right. Mr. Puri, a lot of consumer players are now indicating that rural growth could be much faster. In fact, already in the quarter gone by, it has been better than the urban side. Are you too witnessing similar kind of trends in your business?
See, we are one of the companies that has consistently said that given the amount of investment and energy as well as focus we have been putting on rural markets, we have not seen any slowdown. Our rural markets for the year, for each of the quarters, has actually grown faster than urban markets. And that continues so. We've got a major amount of focus and initiative because we believe there is still a degree of under-penetration of our full product range in rural markets. So for us, we have consistently guided that for us, rural markets are growing at 1.5 times urban, and that continues to be so.
Okay, point taken. Just wanted to quickly talk about the price cut as well. I understand you had taken a price cut post the strong volume growth, and post that we had seen a strong volume growth. Any more plans for a price cut? Do you think demand is enough to kind of pass on the price, or you'll have to give these price cuts to kind of reinvigorate demand?
See, if you look at our results and you see the difference between value and volume growth, you can automatically see the amount of price cuts we've taken. We are clear that one of the drivers of growth in India is offering the right value to the consumer. We believe at now the current raw material environment, we don't need any more price cuts. We don't also see raw material prices falling further in any significant fashion. So to my mind, over the next 6 months, you may not see any significant price cuts or price increases for that matter. 6 months later, frankly, both you and me don't know what the geopolitical situation will be.
That's true. No one knows about it. But moving on, your domestic subsidiary performance was also slightly on the softer side this time. Do you expect some improvement to come in the new year?
No, but if you look at the overall, again, my invitation to you is look at the year and don't look at just the quarter. If you look at the quarter, all our domestic subsidiaries are now performing healthily. Our profit growths are very substantial, and we continue again to be, very optimistic about their prospects.
Okay, so that's the latest coming in as far as Pidilite management is concerned. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.